Hello everyone, welcome back to Upside Down Data. Today I want to talk about one and what our risk indicator is making of its current price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you've been following the channel, you're familiar with our risk model, the upside downside potential indicator. What I'm showing you in this graph is the price history of one over time, with each dot being a day and each day being color coded based on the output of our risk indicator. So a score of 5 is high risk, a score of -5 is low risk. And if you've seen some of our recent videos, you'll have seen that we actually came up with a new iteration of our risk indicator that allows us to look at different types of risk. So what I'm actually showing you in this graph is the long-term UDPI risk output for one. And essentially what that means is that this is looking at risk kind of in the more, that plays out over months. So in the kind of market cycle context. So these bigger moves in one's price and the risk associated with those bigger moves is what this version of the UDPI cares about, this long-term risk. So you'll see that throughout its early history, it oftentimes was in these low risk zones until it had its massive explosion in early 2021, and then came back down to a low risk zone in the summer. And now we're putting in what looks to be, or what seems to be kind of the next leg up for one. One broke its all-time high here back in the fall, and now we've kind of been moving sideways since. Had a correction going into December, but now one has been putting in a pretty impressive move back to the upside. I think from the very bottom of the correction here, from the bottom of the lowest wick in December, it's up over 100%, so over 2x from that point, but still below the all-time high it put in back here in late 2021. So what does our risk indicator make of one's price action? I think we can see this a bit more clearly if we just look at the raw output of the model. So that's what I'm showing you here. So the UDPI plotted on the y-axis and then just time here. And you can see that we're a little bit below 0. So we're between 0 and -1. And so essentially what that means is that even with this rather impressive move back to the upside, the long-term UDPI is not scared of this by any means right now. It's saying that, overall in the long term, one has a little bit more upside potential left to go than downside potential in its estimation. So it's a relatively even risk reward, maybe slightly on, a little bit more upside potential than downside. Now, of course, when it's at this kind of a level, that doesn't mean that downside can't happen by any means, right? There's plenty of downside that could realistically happen. But essentially what the model is saying is that we're certainly not in this kind of high risk territory like what we saw here before we went into this big correction. We're not really at that point in its estimation in kind of more long-term risk perspective. So that just basically means that if one is kind of putting the next leg up, and if the current, if the bull run continues and one's able to continue in price, it might still have a good amount of room left to go to the upside before it might tap out its upside potential and need to stop, either correct or maybe consolidate sideways, etc. But the nice thing about the UDPI, or our current version of the UDPI, is we can compare this kind of long-term risk with a shorter term version of risk. So I'm actually showing you here this is the long term, which is just what we were just looking at before. Now I'm showing you what the shorter term version of the UDPI looks at. So there are 3 versions that we have running for each asset right now on the channel. There's a long term, which is moves that happen over the period of months. We have a medium term, which I'm not showing here, but that looks at moves that kind of develop over weeks to months. And the short term is more interested in moves that emerge over days to weeks, so kind of a much shorter time frame, looking at risk kind of within these broader moves. That is more of what the long term is concerned with. And what we can see is that the short term has been reacting relatively strongly to this kind of impressive move that one has put in since kind of that correction in December. And now we're sitting a little bit above 1, so 1 to 2. So essentially what that means is that kind of in the short term, one has been realizing more of its kind of a decent amount of its upside potential. But if we look at the broader perspective, even if one has to consolidate or correct, or even if it would shoot up to these higher risk levels in the short term, it's still not really at that point in the long-term perspective. And so that might not necessarily mean that we're at some kind of market cycle top, or kind of the top of this next big leg. But it's more, it might just mean that any kind of impressive move that one is putting in the short term might be getting to an end. So I don't think we're necessarily at that point yet. It is useful to note that in the short term UDPI, 2 seems to be kind of an important level in the past. So it'd be interesting to watch that. If one were to continue to run, if it could, 2 maybe could offer resistance, but maybe it would just break on past that. And essentially, the higher that it would get on this risk level, the more I would start to think that any kind of short-term movement is likely getting near its end for 1. But I don't think we're really quite there yet. So, over 1 is certainly not, below 0. It's definitely getting a bit overextended. But it's not the point where I think it necessarily has to correct from here. But it certainly wouldn't surprise me if it corrects, or at least just consolidates sideways for a while. We'll have to wait and see. The short term, anything could happen. But from the UDPI's perspective, it's starting to kind of realize a lot of the upside potential. I would imagine that more of this move has already happened than is left to go in the short term, just looking at this. But that's not financial advice. You should interpret this however you, make your own interpretation of this, your own opinion. That's just what I'm seeing in this data. But I think there's some other interesting things to talk about with Harmony and with 1 that kind of go beyond just what our risk indicators are suggesting. And one thing that I've noticed, and I think is interesting to talk about, is how Harmony is doing in kind of the decentralized finance world. So those familiar with Harmony are likely familiar with DeFi Kingdoms, which is a big a game platform, but also kind of really, as in its name, it's kind of a decentralized finance kind of a platform as well. But it is, at its root, a game. But that DeFi Kingdoms has seen a lot of appreciation in its token, Jewel, in recent days. Its Jewel had kind of gone a little bit parabolic, kind of really appreciated in price. And we can also see that this big increase just in the last 7 days of total value locked on decentralized finance protocols on Harmony, in no small part, it's probably been driven by DeFi Kingdoms and the appreciation of Jewel, and probably a lot of money flowing in there as people want to kind of FOMO in and try to capitalize on that momentum. But one of the things we've talked about a lot on this channel is how the market, at least so far in kind of coming out of the summer of 2021 through now, seems to be really liking layer 1 protocols or layer 2 protocols that have DeFi adoption, that have a lot of uses of their network. And DeFi is one of the things that offers a lot of uses for a network. Obviously, it's not the only use for layer 1 protocols, but it's certainly a sector of the ecosystem that really drives a lot of adoption and use. And we've seen with things like Avalanche, with Terra, with Phantom, these DeFi uses really driving price appreciation. So Avalanche went on a tear, kind of ending before the big correction in December. Phantom recently put in a really nice move before kind of now correcting again as Bitcoin had a correction. And so it'll be interesting to watch what Harmony does coming off of this. If Bitcoin's able to kind of rebound, if it's going to able to catch a bounce here, and the sentiment in the market starts to shift, at least in the short term, more towards the bullish side, it would be interesting to see what happens with Harmony. And if this flow of money into DeFi protocols on Harmony continues, maybe Harmony is another one that's going to get the attention of the market and be able to appreciate. Now, who knows? Anything can happen. Who knows what the market's going to value, if it's going to continue valuing, adoption on DeFi and things like that, like we've seen in the past. But if it does, Harmony is certainly looking nice. And of the top 13, Harmony being at 13th in terms of total value locked, it, as the time of recording, does have the highest kind of inflow in the last 7 days compared to the other layer 1 blockchains that are kind of its competitors. So that's just something to keep an eye on. This is not a guarantee by any means that Harmony is going to go parabolic or go nuts, but certainly it's better than having massive outflows of money into DeFi. It's certainly nicer to have these nice, 26% of the past 7 day inflow, definitely more bullish than having that going out. So just something to keep an eye on, in my opinion. So to wrap up, just to mention a little bit more about where Harmony is currently on the different time frames of risk. So I showed you the long and the short term, and so the long term, we're still in the negatives, negative 0.43. So that's saying that in the long term, the UDPI still thinks that Harmony has more upside relative to downside potential to be realized. In the more medium term, with its impressive run, it's started to kind of realize some of the upside potential that it had in the more medium term, which makes sense. It's had a nice appreciation. And in the short term, we see it kind of reacting a lot more strongly to that more recent move, suggesting that in the short term, it started to kind of quickly eat up some of the upside potential it had, but we hadn't really gotten to these super overextended levels. And so it wouldn't shock me if Harmony was able to keep on running, especially if market sentiment were to shift, be able to kind of keep going to the upside. It also wouldn't shock me as well if Harmony kind of goes sideways, consolidates, or even if there's a somewhat of a correction off of this. So in the short term, I think either one's plausible. Anything's plausible, but in the long term, the risk-reward ratio still seems relatively favorable. So again, not financial advice. You should make your own decisions, but that's just what the model is suggesting right now. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.